How's it going, guys? I'm going to do an educational video on how to set up and sort of use your layouts on Bitcoin, and a few things will depend a lot on the way you trade and how you prefer to be trading. But I'm going to go through the way I do it, and then you can use that to make your own decisions. All right. So first off, every few months, we refined our sort of edge, and my edge has become a lot of moving in terms of the cloud and this range, basically range and liquidity indicators, okay, which you can see on this one, right? I think a lot of edge is within these parameters. And there's only one thing that I really wanted to include, which is our two things, and that is average range that I want to include into this, and also daily levels, right? So and weekly opens and whatnot. So I'm going to start with give me 1 second. We're going to find a few more indicators that is good, and the one is the ADR indicator. I think it's really good. It's not exactly how I want it, but I still think it's a good one. Let me see if I can find it. The ADR, this one. All right, so this is a very good indicator, but I keep on often forgetting it. So what this does is basically it sets the you can choose between bull and bear on this, and it uses the daily candle and the daily, the 1 hour, the weekly, and the monthly and the yearly candles to find sort of the average range, right? For and it uses the 10 previous candles. So for example, if you do a weekly here on the bearish side, you can see that we hit the main target already. Okay, so this is very good, but I often keep forgetting to use it a lot of the time. All right, so you can see here that we're having the 100 and the 125, which is the extended, right? So moving to the range low would be very extreme in terms of what we normally move on Bitcoin. All right, and then you can also use the monthly here just to give an idea. Okay, and the monthly, right? So in terms of the monthly, we only hit 75, which is a good confluence, and they can move sort of to the bottom of this as well, right, to the range low, and then that will be sort of extended, right? So if price would nuke in towards the 58k, that would be a very extended move in terms of that. And the way you can use this indicator as well, which is a very good way to use it, is that if you're having a confluence level, in terms of these ones, you have to understand that this would then be a very high probability level for price to retract back up. You understand that point, right? So that would often, I'm just making this last one up, but at least it gives a good trade to potentially move back up that previous leg of that sell-off. Okay. And the other thing that is good, you can use the 1 hour. So let's go to the bull side, and we can do on the daily, and we move into a bit lower time frame here just to take a look at this, so you can see how it looks like. So in terms of today, right? So if you have a bullish day, right, you would see that price can break out into towards, so you can use this in terms of trading inside the range, right? So in terms of trading inside the range, you would then assume that moving back up into the top part there, right? This whole top would be, as a high probability, and then you're having these ones, right? But if you first break out, you can see that would be the first target, right? And then into the cloud with a second, and then the extended move would be into to the base of the liquidity at those given levels, right? And then you can also use it for the 1 hour chart, right? If you prefer that. And for the 1 hour chart, that's basically for scalping, right? So you can go to the 5 minute, and you can use, I guess, from the current 1 hour, bottom of the 1 hour candle, you can see, where you can expect price to move, and you can see that the 125 extended move lines up fairly nicely with this base liquidity. Okay, so this is a nice tool to keep on just to add some confluence. Okay, and then what I also wanted to add was another indicator based on the monthly, daily, and whatnot. All right, so this one is pretty good in my opinion, and you want to fix that. It's too much, right? So the information we want is that we do not want the daily levels. I think the daily levels doesn't really matter. It just shows, you know, where's the low and the high of the day. I think, you know, that should be too obvious. We don't want the current weekly levels, because the current weekly levels, you know, they are moving all the time, right? So what we want to see the previous levels. And the reason, I'm going to explain this in a few minutes, right? So we don't want we want these, we want the previous monthly levels, and these as well. You don't need to keep this on all the time, but you can keep it on, and then um, once you forget them, basically you can add them back on, okay? Or you can turn them off, I mean. So give me a second here. So we take on these ones now, and you can see that there's a few interesting parts here, right? So what we want from this particular indicator is that we want the confluence, right? So the confluence in terms of price now is that you can see that you're having the previous weekly open and the previous weekly low, which means that that's actually the resistance of these candles. Can you see that? So the previous, let me show you the candle, right? This is the open, and it's the same with the previous back then, okay? And these often might be a lot of potential resistance, right? And then you're having the weekly candle at the top, okay? And then you're having the monthly and the weekly highs back there as well, okay? And then you're having the monthly candle, right? So on the monthly, you can see how it looks like here. So I'm going to put it on. So you're having the monthly up there, the monthly low, and this is the previous monthly open, okay? Which often are good levels because they are all often overlapping, right? So the overlapping part of them, that's often where you get the consolidations. So consolidations is always often overlapping in terms of bars, okay? Very often you will see that. So where the bars are overlapping, where the bars are overlapping each other, that's most of the time where you're going to have the consolidations, right? So sometimes it's very it's easy to forget where they are, okay? And then what happens is that you know, once you put them back on, you're like, all right, so that's why we're reacting to those levels. So as we sold off below, right, so you can often use them as sort of targets. So if on the bear side, moving into them, right, and then coming back into, you can see how they are being used as resistance because they're often liquidity clusters at those given price points, right? So if you combine this indicator now with this one, right, and you put on a weekly bear target or a monthly, right? So let's put the monthly. The weekly is so you can see that the weekly is around just below the weekly lows, right? And then you're having these ones, okay? So if you're using the monthly targets, you can see that we're having the previous monthly lows. We're having a SR liquidity level and a swing low around the 60K, which is also a big figure, right? So it's a massive confluence in terms of liquidity. And, you know, that should give, you know, sort of confidence that if price would ever reach those levels, you know, that would be very good levels to buy. The other part is that that you understand as well that now that you can see that you can clearly see that price is being inside this particular range, right? So price is being trapped inside this particular range. And if it would now to break out, right, in terms of a week, let's say next week we start coming back up and we're starting to break above this weekly high, we understand that we are not trading above all of these given weekly levels. What often happens, right, is that price moves to the higher side, okay? And also that, you know, if you're starting to lose these levels as well, we understand that potentially we're going lower. Right? So you can use each of the previous and the previous weekly levels all the time. And you can understand, you know, if we are being range bound, right? So how can you assume that we are being in a range, right? It's pretty obvious, isn't it, right? So except even having this month, you can see how we are trapped in between all of these given levels, okay? So this is something I like. And other thing that is often a good thing is that if you are often caught, if you catch yourself in being pursued by candle formations in terms of bullish candles or bearish candles, right? So if you're seeing aggressive bullish candles or whatever, it's a good idea to switch to bar, right? I do that sometimes. So if you switch it to bars like this, the difference is that you don't have any bias in the candles. The only thing you can see is that the open and the close, right? So price just ticks. It's just a line, right? So the line goes like this. So if price is moving lower, it opens lower, okay? And let's say go this low, goes a little bit back up, it goes to the side, next candle opens, it goes a little lower, comes back up and moves higher like this, right? And that would be an engulfing sort of pin bar, right? But you don't have any candle formation, so you don't being pursued by, oh, look at that, that's a hammer, you know, that candle is extremely bearish, look at the size of it, you know. This is very neutral chart, and it's sometimes easier to only trade levels when you're having the bar chart on. So you know, if you feel that you're getting trapped into this sort of gambling mentality based on what you have learned and what you see in terms of the chart, it's often a good idea, and you can put on the levels that you want. Okay, so if I take this now to you here, you can see that, in my opinion, I think it's in terms of the chart, it's easier sort of to see where price wants to go next. Like, so for me, it's not obvious, but you know, it does seem like a bullish case. You can see how prices are being pressed by the opens, right? So the opens are the other ones, right? So you can see right there, up, open, bit up, open, right? So you, in my opinion, the price want to go like in that fashion. I think I'm not getting. It's easy to not get trapped into emotions. I think the candle chart for many people are very emotion-based feelings when you see them. At least in my opinion, you get very emotional when you see some of this very bullish or bearish candle or whatever, right? But when you're having the bar chart on like this, you know, I think it's more neutral-based feeling. I think this goes for most people, and it can be easier to make, you know, informed decisions, and you can switch back and forth as you feel. Okay, but I think that's a good tip. Okay, so this is a one layout. Let's go here and check, right? So we're having this. So we're having the cloud. We're having the buy signal, the SRP for buy and sell signal. Then we're having the weekly, monthly levels to understand, you know, in what kind of direction we are moving. Cloud, which is trend based, right? And then we're having the bar chart in terms of bias. Okay, so I'm going to save that. Let's save that particular save indicator template. Let's just call it 4th of April 2024. I think it's a very good layout in my opinion. Okay, now in terms of what I want to use when I'm making the chart here is that I find out that the more charts I watch in terms of what I want to trade, and now I'm particularly talking about leverage. Okay, spot trading is very different because when it comes to spot trading, you should usually have a much higher time frame horizon and not be very focused on the lower time frame. So on the high time frame, when it comes to leverage, so most of these conversations are going to be based on leverage. When it comes to spot, every now and then you can make a list. This is a list that I like to watch, right? I have a longer list, and then having a more trading based list, which is slightly shorter. But you can have these lists, okay, and these are decent to watch, and you can scan through them on a weekly and see if it's something that, you know, wakes your interest or whatever. So on spot position, you want to buy low, sell high, right? It's sort of a different approach. While when you're trading, you sort of want to focus on sort of trading the range, lows and highs, you know, which is the most important part. So let's set up trading based. So I think what people are going to have the most success with is having trading mainly Bitcoin to understand the market, where market is moving. And, you know, quite often you will see that if Bitcoin is nuking, most of the market will go down as well. And if Bitcoin is looking extremely bullish, right? And then you can always go and trade Bitcoin betas, meaning that high performers in the market, and get away with it very good, right? But it will be based on the Bitcoin chart regardless, right? Or because the main thesis is that you want price or Bitcoin to be in a steady position, because if Bitcoin is in a bad place, it will be very difficult to take good trades on the rest of the market as well. Okay, so with that being said, I think let's do this one, right? So we're gonna do this one, this chart. I want 6 of them. So the main point. How can I change this one? Give me 1 second, guys. Let me just take this to a bar chart. Let's use 4th of April. All right. So the thing is that now I can't really do it because I'm recording this chart in a smaller frame on my monitor. But for me, I can have 6, and they are pretty large. I think 6 is the maximum on a small monitor. I think 4 charts is the best one. So I think let's start with, just as an example, let's use 4 here. So on this one, I think 1 hour, right? So you're having 1 hour, you're having the 4 hour, and then you're having the 8 hour on that one, and then you can have, let's say, 1 day on the last one. Okay, even the weekly is good enough. But with this information, you can start navigating and you watch sort of price in a different manner. Okay, of course, you know, we can put this into candlesticks, right? If it's easier for you to watch, right? This is the same. So when you watch this in a candlestick or in this particular fashion, you understand and you can watch sort of the main trend and how things are looking, right? So you can see how things are unfolding from a very low time frame into sort of a high time frame, and you can have sort of a bias, right? And you watch this. I think it's a very good way to approach trading. Okay, at least Bitcoin. Then you're having, that's the main sort of where you are trading, and you're looking for decent levels based on all of these different time frames. So you can see that we're looking bullish here on the 1 hour, reflecting on the 4 hour, that we're moving sort of above this, right? But still the 8 hour hasn't really happened too much, and the same goes for the daily, right? So the daily as well is kind of passive. Okay, it's more or less what happens on the 1 hour at the moment. Now at the other part, what you want here is that we usually, it's a good idea to have a dollar chart. I use the euro instead because the dollar chart doesn't have volume in it. Okay, and since it doesn't have volume in it, it doesn't fit the indicators because the indicators are based on volume. Okay, so having this one based on sort of this is sort of the dollar. Okay, you're having S&P 500. It can be also the Nasdaq. This is the sort of the same. And then you can have gold and oil or whatever, right? So let's use gold on Rwanda. All right, so then you're having gold, and then you can use this BTC if you want, right? It doesn't really matter, okay? This is not the most important place, you know. You're just sort of trying to get, you know, some. So if you take that on the 4 hour, let's put Bitcoin on the 8 hour. It's just to get a feeling, you know, of what is sort of going on and what is moving, right? So sometimes you can see here that the gold is sort of creating a temporary top. Euro as well is moving slightly higher, but you want to see sort of what is looking bullish in terms of the range on a daily, and you can also use the daily maybe on this one. I don't like the daily. 8 hour or 4 hour on S&P kind of depends, but you want to see sort of what is the next here. So when you watch the chart on this sort of time frame, what you are basically looking for is that you're just looking for strength and weakness relative. So now, for example, we can see that the gold is slightly topping off here. Okay. Um, let's just do a smaller time frame, but it's not bearish. We're just sort of topping off here, and then you're having the Euro USD looking strong, the S&P, you know, arguably looking kind of strong, and then this sort of shows you that potentially Bitcoin is lagging and that we can get a push higher, right? So you can see that from the resistance, right? So if you find support, right, on this one, and you can also see where when you use the mouse, you can see where price were at which given times, right? So you can see that the candle, most of these ones where I have you right now, you can see that that price pumped together, right? So Euro USD and the S&P is flows based on dollars. So often you will see that if S&P 500 is selling off, dollars going up, because when you're selling S&P, you're often selling it for dollars, right? So if you're hedging basically your S&P positions, dollar usually goes up, okay? And sometimes we can see that Bitcoin is lagging because remember that they don't move exactly together in that sense. It just shows you about relative strength in terms of risk off to risk on environment, more or less, right? So you're just using it to get a feeling of what is next. Now, so now we're having sort of the Bitcoin, that is the main character that we are watching on different time frames, right? And then you're having this as a macro watch where you see sort of the macro feeling. In general, in the market, you can put gold and you can put yields there if you want, or you can use some other beta such as yen or whatever. Okay. Now, in terms of altcoins, what I prefer is I often change this quite a lot, right? And depends on what I'm trading. Now, I do think that the main edge at the moment, I don't like this one is the one. No, sorry, this one is the one I've been watching lately. So I think at the moment the meme, due to all the memes and all of that, I think and a few layer ones. Give me a second here, and depending sort of where we are within. If you're in an expansion phase, I watch the lower time frame because you're trying to get in on small trends every day. But when you are in larger pullbacks, it's better to watch. A bit high time frame to see which ones are coming into some high time frame support, right? So you can see here that we're having FTM very close to it inside this. You can accumulate some spot if you want. This one we can use Ocean instead. You can see Ocean as well coming into this level. So the thing is that this as well, I have 8 charts open. When I put it on the full monitor, this looks really good on my screen. I think for smaller screens, maximum 4, 6. The idea is that you want to see the structure, right? So you want to see like this, like 4, you want to see the full structure of it, right? So you can see on the 1 hour chart there, the structure I'm watching is the high and this low, right? So I'm watching weekly high and close to weekly lows, okay? And that's sort of what I want. So you can see if we're coming into weekly lows, they're going to offer some resistance, right? And we're understanding where we are within the framework that we're working with, and it makes it a lot easier to understand sort of what is next and where you want to take profit and whatnot. So the same goes here. So I think Dogecoin, sort of watching that. VIF has been very strong. Solana, Pepe is good, but I might stop watching. It's been very slow. I think it's better to keep only one, right? So the thing is that I'm gonna change that. So I'm gonna watch with Dogecoin is okay. Solana, I think Near is worth having there, even though it's been weak. I think it's gonna perform very well in the future. It seemed quite weak, but I think in my opinion it will become very strong. Stacks as well and FTM are some of them that I like. Okay, and then you watch these high time frame and then you can sort of change that. Okay, because remember that the AI, right? So regardless if you're watching Ocean, Fed AI, IEGX, or whatever, the structure is very similar. It will be extremely more or less the exact same thing. Okay. And then you're having Rune as well. It's been moving decent, so I think it's worth watching. Okay, and then while having these ones, this can be changed a lot. And then often I have here usually something that at the moment I'm not using it, but it's something that I use. Then I have lower time frame at the top and high time frame at the bottom, and I just see how they're moving. But this is when I chase the market, right? And I chase the market when we are more in an up only trend to see sort of what I can trade at the moment. I haven't been using that a lot. And then we have this one as well. This is the only lower time frame. I'm gonna take that away because it's been a bit too much. Okay, so I think these ones are the ones that are good to watch. And then I often tend to have a single chart open, and within this single chart what I'm watching is the left, right? So this is sort of something that I keep open to just check different coins, and then I use the left side here to just scan through, right? So you can go to the weekly, right? And then you can just sort of quickly just take a look on what we are seeing, right? And then you can use that for sort of spot positions or whatever, right? So just scan through like this really quickly, and you can see sort of where we are within the time frame that we are working with there. So you can see that most of these had some really large sell-off, right? So these are massive sell-off. Okay, so we're having like 40% sell-offs into some of these reasons. I think we're gonna go sideways. So what we want now, just want to give that sort of an example. You are watching something similar to, this is what you want to happen, like that, right? And then you want to see sort of that similarity go across and then move higher all along, right? Because remember that if you start moving now lower, the charts will be so bearish that will be absolutely insane. I really hope that we won't get that. Okay. So if you look at, you can see that on more or less on a lot of these weekly charts. You can see how bad that most of these are actually looking. TI is horrendous. So we're looking very toppy, but it's just one weekly candle, isn't it, right? So we just have to sort of assume some of these stuff will happen every now and then, and see what kind of momentum we will build moving forward. I think this is massive top formation, right? So if there wasn't for that, I actually believe that we will see a bull market soon, that all of this is an accumulation phase. If it wasn't for those thoughts, I would be extremely bearish, right? So if you saw this price action close to top, top in terms of now we're having the opposite, right? So we can have another small bear market rally, or whatever you want, not bear market rally, but a bull market sell-off, a larger one, in terms that if we're getting a bit higher inflation and we're getting some bad numbers and the Fed comes out or whatever, we might get a larger sell-off, and we're going back into sort of accumulation phase. But regardless of that, I still think that we are so let's say, so a good case would then be to see price from current levels. Give me a second here. So from current levels, whatever it does, okay, and then we start accumulating and moving higher. If you're having the worst case will be to fill in sort of the void in the lower and create sort of a larger structure like that. If that would to be happen, whenever the time is correct now, we will have a massive rally, right? So regardless, I think it's same. It's just about keeping risk in place so we don't lose all of the money, right? So you can see that most of these charts, we are nowhere in terms of the weekly, right? It's just a few outliers that has been moving, and the outliers that has been moving are basically some of these layer ones that actually has some fundamental value in the terms that people are building, the chain is being used, etc., right? And you're saying like Bitcoin had this massive bull run, right? And this is due to ETF a lot of buying coming in, you know, and except that you don't have a lot of change, right? Change moving higher. You're seeing memes is more of a fun based trading, right? And then you're having the AI, and the AI space is real, right? You're having ChatGPT, you know, the AI is real, basically, right? It's very real. So you're having very defined sectors moving, while the whole space is actually lagging, right? So something to keep in mind. And always we will, like, there was when was it, 2020, 2019, when we had the DeFi summer, when the whole market was lagging and you only had DeFi running for the summer, right? So you're having always, you will always have these kind of not ideas, but these kind of prime movements and narratives moving in the market, okay? And that's something really to take with you, in my opinion, and then just take it as it is. And then when the bull market comes, everything goes, like everything goes. It's very different, but still it will be very defined. We will never have the same amount of bull market, the same bull market each year, but you will feel it when it happens, because things get very what happened with the memes, that's what's going to be just with the whole market. Okay, so enough with this one. So just recap, we're having the indicators based on the main trading chart, which is Bitcoin, with 4 or 6 time frames. Then you're having the macro look, where you can just take a look and see, you know, how SPX is moving. I like often to have S&P 500 on the 1 hour, just to see sort of the weakness and strength. I don't really think actually we need the weekly opens and whatnot on S&P, because it moves quite differently, to be honest. And you just want to see, you know, if you're seeing relative weakness, or if we are seeing strength, right? And you can see that. You can go to, let's say, a 4-hour chart or whatever on Bitcoin, and you can just watch the beta, how you can see now that if you're breaking out now on S&P 500, often you will see Bitcoin as well move with it, right? And now you can see that the sell-off, all the larger sell-off that happened, if when I take my cursor here, you can see that on Bitcoin, you will see it's on top there. You can see when I move it on Bitcoin, you will see that the drop on Bitcoin was correlated with S&P 500. And you can see when you had the S&P 500 sort of create the bottom formation right there, you also had Bitcoin do that. Okay, so that's something to take with you. So you can watch for relative strength and weakness, because if S&P 500 nukes, you know that crypto will move down a lot as well. Okay, long video. I think it's enough for now. I hope you got something from it. Okay, guys, peace out.